the community has taken action to reduce the amount of Terra Classic tokens. They stand behind the asset by providing incentives to users and exchanges to burn the token. In the early hours of this Saturday, almost 12,000 tweets had been tagged with hashtag LUNC. In spite of backing from the official Terra Luna channels, it appears that Terra Classic earned the community's favor, as its market cap is nearly 3 times that of Luna 2.0. Although Terra 2.0 is the recognized new digital asset, the traditional token has been favored by the community. Compared to Luna 2.0's $233 million market cap and $48 million 24-hour trading volume, LUNC's $646 million market cap and $74.5 million 24-hour trading volume are considerably more impressive. While Ethereum and Bitcoin both saw significant price increases this week, LUNC and Luna lagged behind. Even though the price movement has been lackluster, the Terra community as a whole remains committed to the endeavor. The Terra Luna Classic price has pulled back in the past few days as demand for the coin wanes. The LUNC token is trading at $0.000095, which is about 42% below its highest point in June. At its peak, the coin was trading at about $120, meaning that it is the biggest blowout in the cryptocurrency industry. Terra Luna Classic is a cryptocurrency that represents the remnant of what was once a top 10 cryptocurrency valued at over $40 billion. In its prime, the coin derived its value from the value of Terra USD, an algorithmic stablecoin that was then valued at more than $15 billion. After the stablecoin lost its peg, the developers decided to do a hard fork of the original Terra and form another cryptocurrency. The original one changed its name to Terra Classic, while Terra USD changed its name to Terra Classic USD. Today, USTC has a market cap of over $377 million, while Luna is valued at over $229 million, according to CoinGecko. As a result, the stablecoin has struggled to regain its peg. On the other hand, it has become challenging to determine the real market cap of Terra Luna Classic. Therefore, from a fundamental perspective, there are concerns about whether Terra Luna Classic is a good investment since it has no role. For one, its stablecoin is no longer stable, and there is an overall distrust of the network. In addition, some analysts believe that Terra's original and new versions are designed to rip investors off. Also, South Korean and American regulators are pursuing Terra's leaders. For example, South Korean regulators raided the home of Terraform Labs co-founder. As lawsuits pile up against Do Kwon, Daniel Shin, and Terraform Labs, the community in the United States has shifted focus to burning Luna Classic. Luna Classic's price trend has revealed a bullish potential, and bears are fighting to regain control of LUNC. The community is focused on Proposal 3568 for improving Luna Classic through the implementation of a burning mechanism. The proposal mentions a tax burn mechanism to reduce the total supply of Luna Classic, increasing the value of the leftover tokens. The burning mechanism must be true until the total circulating supply reduces to 10 billion. The LUNC price trend recently flipped bullish for the short term after the price broke out of the falling wedge. The outlook on LUNC remains bearish in the long-term timeframe. After the massive sell-off that followed the collapse of Terra's sister token Luna UST, there was tremendous selling pressure on Luna Classic. Consequently, several analysts offered bearish predictions for LUNC with the rise of Luna 2.0. Notably, Luna 2.0 airdrops had a negative impact on Luna Classic. The current downtrend is likely to reverse as the trade volume has declined since the beginning of July 2022. The interest in Luna Classic has declined, however, the rise in the number of LUNC burned could trigger a bullish sentiment among holders. The collapse of Terra and its assets Terra USD, now Terra USDC, and Luna, now Luna Classic, was detrimental to the entire market. Despite occurring months ago, it remains a relevant topic of interest. During its downfall, the whole formulation of the project was questioned. However, after its creator Do Kwon abandoned the project, the community seemed to have acquired a newfound interest in the infamous asset. Following the failure of Terra, while Kwon was busy working on Terra 2.0, the community wanted to carry out burns. Proposal 3568 was put forth to burn the supply of Luna Classic in hopes of surging its price. The community seemed to adhere to this and has been on a burning spree. Just today, the community will be burning 50 million LUNC. Nevertheless, the community seemed to be diligently burning the asset. It should also be noted that people have been expressing interest in the asset following Kwon's departure. With no proper management, LUNC might be emerging as a community-driven project. The crypto space has had constant run-ins with the law. As the industry becomes more and more accepted, it creates the opportunity for crimes. Nonetheless, agencies and government bodies have been hard at work trying to bring more security and regulation to the space. According to prominent security firm CertiK, over $2 billion was lost to hacks and exploits in Q1 and Q2 of 2022. Of this amount, $802 million were stolen in Q2 alone. A large chunk of the stolen money in Q1 is attributed to the Axie Infinity Ronin bridge hack. However, the firm did say that assets lost to hacks went down by 42% in Q2. Crypto touches all forms of crimes as fiat and then some more. However, the tools and means involved are vastly different. According to the study, 74%, of agencies felt they were not equipped well enough for crypto-related investigations. But they still admit that crypto will play a role in positively pushing our financial systems. The respondents likewise rejected the notion that criminals mainly used cryptocurrencies. The study also discussed good training programs for crypto investigative tools. According to the respondents, the most crucial elements of any blockchain research tool are precise, reliable blockchain data and straightforward visualization. These features are essential for concluding investigations and securing successful outcomes in court. Over 50% of the respondents receive more than 10 crypto-related cases yearly. On the other hand, nearly 40% receive more than 20 such cases. They also pointed out that a majority of patients were fraud-related. We are constantly talking about fraud because we think this issue is important. They endanger their crypto assets. They cause investors to flee. We especially emphasize this so that our viewers should be careful about it. All this general picture will of course shake the trust in cryptocurrencies. Of course, as we say in each of our videos, it is useful to be careful no matter what cryptocurrency it is. After all, these are risky investments. The video has been prepared purely for informational purposes. The stories are not investment advice. Thank you for watching us.